So I think maybe if we just go around the big four, if we start with Sweden, I think, which is the biggest of the four in terms of investment volumes, the big difference between Sweden and the other three Nordic countries is that you've got a ginormous listed sector, and you don't have that in Denmark. So in Denmark you have two listed companies, Juden and one other, and in Norway it's almost non-existent, and same in Finland. Whereas in Sweden you have a very large listed property sector made up of companies that I don't know if you had to actually put a number on, a percentage on how much they take of the commercial real estate market. Maybe it's 30% of the overall volume in terms of ownership in the listed side. So a very, very large part there. And then on top of that, Sweden experienced a crisis in the 90s, and a lot of the big pension funds in Sweden had their wings clipped with respect to ownerships outside of Sweden, so they were no longer allowed to invest in the UK or things like that. And what that's meant is that a lot of the large Swedish pension funds have ownerships of property companies. So, for example, Vasakronan, which is about 10 billion euro, is equally owned by AP1, AP2, AP3, and AP4. And so what that means in Sweden is you have a really Swede-to-Swede dynamic market, and actually on an average over, say, the last 5 years, Sweden's seen probably be about between 10 and 20% of foreign investment, which if you flip that and looked at it from a UK perspective, it would be something like the reverse. So Sweden has been very, very domestically orientated and fueled. That's started to change this year. We've had some big transactions with some groups such as Blackstone and Starwood coming in and doing billion-plus transactions. We've had one of the people on, I won't steal the thunder of NREP, but they've done a very large transaction, and that's had some Danish capital coming into Sweden, so that's quite interesting to have Mikael here to talk about that. But I think from a perspective of Denmark, if we move there, it's far more capital market orientated, because you've had a number of property companies, more distress, which we haven't seen so much in Sweden in terms of property companies requiring recapitalization, or there's a lot more banks in Denmark, and we've seen Catella in particular have had a lot of work on that side of things. And that's brought a lot more of the American private equity money in from the recapitalization perspective. So I'd say a lot more foreign interest in Denmark than Sweden. And then when you go up to Finland, if we take Finland, a much smaller market than both of those two, but if you talk to a Finn at the moment, they're generally fairly pessimistic. But having said that, these listed companies in Sweden are all starting to move up to Finland to try and take advantage of the yield gap between there and Stockholm. So you've got groups like NRAP in Finland. You've got groups like Sagax and other listed groups that are now starting to buy more in Finland. And then in Norway, a lot more increased international activity there. So across the board, it's been definitely a quite interesting 12 months since we last gathered here, in terms of the level of interest from outside and actually being able to commit capital.